How's it going, everybody? It's Stas here, and in this video, we're going to be talking about and breaking down the top couple of stocks and ETFs that I'm personally watching and looking to trade right now in the end of December, heading into this new year here in January of 2020. And New Year's, guys, always is a fun time. New goals, new resolutions, new ambitions, and especially heading into the new decade here, this is a very special time that we're in. So I'd love to know actually any goals that you have down below in the comments if you feel like sharing, whether it's stock market related or not. I'd love to know, and maybe we can interact and exchange ideas on those goals, and I can share some of my goals with you guys as well down below in the comments section. And also in this video, I want to just briefly go over what the markets did these past 5 days in terms of the S&P 500, so we can get an idea of what could be going on here in the short term future. We'll take a look at the VIX as well. We'll talk about some gold, and we'll go over some scenarios. So before we get into everything, all I ask from you is if you enjoy the video, feel free to go down below and hit that like button. Consider subscribing if you want to see further content from me, and if you want to be further connected with the Strive Smart community, feel free to go down below and join our Discord group chat as well as our Facebook group in the description box below. So let's kick off the video starting off here with the SPX, also known as the S&P 500. So this 5-day, 5-minute chart that we're looking at here shows us what the 500 largest publicly traded U.S. companies did over this past trading week, right? So we can see it was an uptrend the entire week from 3216.03 all the way up to around 3247.93, that being roughly a 1% move from the bottom to the top here across the week in the S&P 500. And again, we hit an all-time high on Friday, although we didn't have too great of a day in terms of the close, up only 11 cents. It didn't even register a percentage change here, but we hit that all-time high. We ended up closing above that 180 SMA, maintaining that uptrend here on the 5-day, 5-minute, which is absolutely crucial in my opinion. Now, if we pull up this 4-hour chart, some worries start to come up here for me, at least personally, right? Markets are extremely overextended. We hit all-time highs, all that good stuff. People are in the euphoria phase right now, but the truth is we're so overextended, right? We're so overextended above that 50 SMA, which is known to be a level where we pull down to, right? And we're about 2 to 3% extended from that area. And another moving average that we've held before in the past is the 180 SMA. So let's say we saw a bigger correction down to that 180 SMA, that would be around a 5 to 6% correction, which I've been advocating for on this channel. I would love to see that, me personally, because I'd be a buyer of companies at this level if we were to pull down, because I think these markets do have an upwards trajectory from here through the election, at least, in my personal opinion. But I would like to see it pull down before we continue that upwards trajectory, right? So at this point, I think the S&P is a bit overextended. I'd like to see a pull down, and it seems like the VIX is pointing to that as well, as we're holding 12. You know, we're starting to see a spike in some fear right here, a spike in some volatility. Gold markets are also pushing up. If we look at gold, it's been rallying these past couple of days from around 1472 all the way up to 1520. So these are signs that are concerning to me. Overextended SPX, RSI very overextended above moving averages. The VIX is showing some fear, at least fears creeping in, because we were up 78 cents on Friday, and also gold is showing some fear. When people are scared in the economy, in the stock market, when they're fearing the dollar, let's say for example, they flood into gold and gold starts to push up. That's why people called gold a hedge. So these are some things that a lot of people have been noticing, a lot of people have been talking about, and they're really valid things to look at. So those are some thoughts. I'd love to know what you guys have to think down below in the comment section about that. Now let's talk about some stocks that I'm personally watching. We do have a nice chunky list here today, and let's start off with NIO, ticker symbol NIO. NIO. NIO is a stock that I made a video about a couple of days ago titled NIO stock going to $3 per share. And let me explain to you guys why I made that video and kind of the technical breakdown behind that and why I still think it's possible as long as their earnings on the 30th, which is actually tomorrow, go decent to well, right? If they're a complete disaster, this stock might tank, but if they're, pretty good in terms of their earnings, I think overall we'll be able to get to that $3 area. So a lot of people were asking me, oh my goodness, Stas, NIO is pulling down because it did see a nice correction over these past couple of days from 276 all the way down to about 238, being around a 15% correction heading into the earnings report. And the truth is, what I told these people and what I want to tell you guys in terms of my opinion is I think this is strictly profit taking before the earnings report due to the massive run up we've seen literally in the past 2 weeks, 2 to 3 weeks here in NIO stock. That run up was about 20%. So the fact that, hey, we're seeing some profit taking, it makes sense to me. Those that are kind of just locking in before the earnings report, because if you guys recall last earnings report, or was it the earnings report prior, I don't remember off the top of my head, but they canceled the earnings report or they pushed it back a day or something crazy happened with it, which was extremely unprofessional, and the stock ended up dropping. I believe they reported poor earnings anyway, and I guess that's what people are, that's why they're locking in profits to make sure, just hedging against the risk of this happening again. But either way, the uptrend is still intact in my opinion, as you guys can see based on this trend line. We're also holding that 180 SMA support here on the 2-hour chart, and if we zoom in here to the hourly chart, you guys can see that a bit closer. And another thing worth pointing out is we're holding 240, which happens to be an old resistance from these past couple of weeks, and it used to be a support back in June. So this is a pretty strong level of support, and the fact that we're holding that into the earnings tomorrow, that's pretty promising in my opinion. So in terms of NIO, I would love to see it hold this level and start to rally back up into 250, 260, and hopefully their earnings are good. Hopefully everything goes smooth, and I'll make a video about that either tomorrow or the next day, and I feel like that would cause NIO to pop back up here at least to 270, and maybe over the next 2-3 weeks, maybe month, whatever, right? It may go back up to $3 per share, which I think eventually that will happen. So the next stock is Amazon, ticker symbol AMZN. We got some good news about Amazon. They had billions of orders worldwide, breaking records this past holiday season, or should I say this holiday season, since technically we're still in the holiday season, right? So that's what caused Amazon to fly up here from $1,800, cracking this resistance and actually cracking another resistance at $1,850, and that's really good because, like I've mentioned in previous videos, out of the major tech stocks, you have Amazon, obviously Apple, Facebook, Microsoft. It seems like Amazon has been the lagger behind these 3 or 4 major tech stocks, over these past couple of months. So this is very much needed in my opinion, and it's about time that Amazon is flying up. So right here, I'm seeing a potential entry forming around 1850 to around 1860, especially since we started pulling down from that 1900 peak on Friday morning all the way down to the close. We pretty much pulled down and downtrended, which makes sense. What that shows me is that, the stock ran up very quickly, which it did, and people are just locking in some profits. But I still want to ride this momentum, which is why I said I want to get in again at around 1860. That's the goal, and from there, maybe we can ride this up back to 1900 and maybe even higher, which will give us a couple of percentage points here of profit, which is the goal for swing trading, or at least my strategy of swing trading. So another one that I'm watching is Netflix. This is another one that rallied quite quickly over the past couple of days. Now it's seeing a retracement at a resistance at around $340, which is a good sign here for an entry. In my personal opinion, we got extremely overextended. RSI got very, very overbought. Now we're getting more towards the middle of this channel between 320 and 340, and it's more of a comfortable range to scale in my opinion. Sure, I'd like to get in more towards 320, but if we do get to 325, maybe I'd scale in there, maybe add a little bit more after that if it does end up pulling down more. But I think this is setting up for a nice swing entry, maybe this week, maybe next week. And another thing worth mentioning with Netflix is they are reporting earnings here in about 3 weeks on the 21st of January. So Netflix, I'm liking this one on the pullback. Another one is PayPal, ticker symbol PYPL. I'm actually already in PayPal for those of you guys that don't know. And this is one that I'm liking anywhere in this 108 to around $112 range. And I do think where we are now, there's still opportunity to get in on PayPal. And I'm honestly still looking to add more into PayPal. And for those of you guys that don't know, I've been in since around 104, added a bit more here in the 106, 107s, took some profits here at around 108 ever since we broke above this level. I think I added one more time if I'm not mistaken, and I'm looking to add more, but ultimately I want to get out at around 112, and if we break 112, I think there's even more potential, right? Maybe back up to 116 where I'd probably re-enter and maybe capitalize on this move of around 3 to 4% from 112 to about $116 per share here on PayPal. Another one is McDonald's, ticker symbol MCD. This one is one that I'm not entering unless it breaks $200, guys. That's a level that I need to see, because if we pull back on this yearly chart, I don't want to get caught in a potential dump off here for the completion of the right shoulder, because this could be a potential head and shoulders forming here. You guys can clearly see it. A lot of people are arguing, and I agree with them, right, that McDonald's is overvalued. I agree McDonald's, maybe it's not extremely overvalued, but I think it has a PE of around 25, which arguably is a little bit frothy, right? A PE for McDonald's that I would maybe buy more heavily in would be, I'd say, like an 18, maybe a 20, and right now it's a 25 last time I checked. So this dump off could end up happening, and if it does, it would get to that PE that's more close to 20 that would be more reasonable, which is why I think this is not out of the question here, especially, let's say we see a market correction, a big one. This could definitely happen, right? But on the flip side, I still think it's possible, despite the fact, McDonald's is overvalued. There's so many companies out there that are overvalued, and they still keep going up, right? McDonald's could be that company that, sure, it took a pull down, it's still overvalued, but it could still go up, guys, if these markets continue to stay healthy. So if it does that, if it breaks above that 200 level, which would really confirm to me on a technical basis that there's more upside, at least in the short term, that's where I'd enter. $200, maybe 202, and from there, if we go back to that 4-hour chart, we can see, from 200 up to around 205, that's a trade I'd like to make of around 2.3%, and even higher if it gets even, into the 220s, that could be roughly a 10% potential on McDonald's here, ticker symbol MCD. Another one that's very, very hot ever since we came to this little trade deal, U.S. and China came to this little trade deal, BABA, ticker symbol BABA. A lot of the stocks in China, Tencent being another one, they've been on fire these past couple of weeks. And we can see here, we're actually seeing a bit of a correction, a very minimal correction, but it is a bit of a correction here on Alibaba from around 218 down to about 215, which did open around a 1.5%. And am I chasing this one here? It's a screaming buy? Absolutely not. What this is looking to me, though, is the beginning of a correction that could potentially last even further, where if it does last further and gets to 210, that is where I think it could be a quote-unquote screaming buy. Not a screaming buy, not like, it's the best stock to buy, but it's a stock that could be good in like a momentum play, for example, because the momentum here is up and any weakness is worth considering to buy into, in my opinion, with stocks that are moving up like this like crazy. Another one is, Apple, for example. These stocks have just been crushing it. Any weakness could be a sign of a buy. Microsoft, MSFT is another one that's just been ruthless, right? So BABA, it's in the same category, and any little pull down I think is worth maybe scaling in for a swing, at least in my opinion. So BABA, 210 would be the ideal entry. Am I jumping, over the fences to buy at 215? No, but at 210, yeah, I'd probably buy a little bit for a swing and then scale in if it continues to push up so I can ride the trend that way. So BABA, that's my thoughts there. Uber's the next one I want to talk about, ticker symbol UBER. This is another one that I own, and a lot of people were asking me, oh my goodness, Das, Uber pulled down, but the truth is, guys, this is a healthy pull down. It is not crazy whatsoever because this stock has gone literally from $27 on the 10th of December, which is just 3 weeks ago. 3 weeks ago it was $27, and then it went to $31 in the matter of less than 3 weeks. 17 days, guys, and that's a move of around 10%. So the fact that we're just pulling down 50 cents here, nearly 2% on Friday, that is nothing considering we ran up 10%. So I'm not panicking whatsoever in terms of Uber. If we're looking at the trend, it's still holding that uptrend. And on the 4-hour chart, we can see it even better. Bullish cross, we're holding that 50 SMA. Green candle forming after hours. Ultimately, I think this will hold and we'll get above $31, which is where I want to add even more money with the goal of selling at around $33. And even at that point, guys, if we break 33, like I've been mentioning in these videos, I could see even more potential on top of that. So Uber, ticker symbol UBER. Disney is the last stock I want to talk about here, which I think is at a very interesting spot, being that it's on top of an old all-time high, old resistance from back in the summer here of 2019 at around 145. And it's on top of the 180 SMA here on the 4-hour chart. So ideally, for an entry into Disney, in my opinion, we need to see a break above this 50 SMA and ultimately a break into 147. That's where I'm looking at as an ideal entry for Disney. And from there, guys, up to about 153 if these markets stay intact, continue to rally, to continue to be healthy here for the next couple of months. Up to 153, I think Disney could hit that, and that's around a 3 to 4% potential. So if you guys are looking at my picks, you realize a lot of them are in a weak state right now, and that's kind of how I approach things. When I'm, swing trading, I like, buying into stocks that, yeah, they're uptrending overall, but they're showing weakness in the short term. Literally all of them are like that, right? Disney is showing weakness, but if we end up popping, that could be an entry point, right? Uber, a lot of weakness, but we're starting to reverse. It's opening up opportunities. PayPal, a lot of weakness. It's reversing. It's showing opportunities, right? So a lot of my picks are like this, and that's what I personally focus on. Others, they have different strategies, but this is the main one. It's obviously more in depth than this. This is obviously just, a outside look. It's kind of like looking at the cover of a book, but this is just basically what I do in a very short, sweet summary. So those are my stock picks for this week and heading into 2020, and I can't reiterate it enough, guys. Don't be caught in this euphoria phase of these markets are continuing to go up and they'll continue to go up forever. I talked about this in yesterday's video. The VIX is tuning up here, guys. Just keep an eye on this. If everything starts to fly up in terms of the VIX, if this thing starts to fly up, the markets start to tank, things could get ugly, right? If gold continues to rally up, that's showing fear in these markets because people are flocking to gold. And speaking of gold, 2 ETFs that I'm watching are going to be JNUG, JNUG, which is a 3x leveraged ETF that goes up whenever gold goes up. Another one I'm watching is GDX. And why not? I'll give you a third one. It's GLD. These are all gold tracking, investments, ETFs, things that you can trade. So those are worth watching. And overall, the market ETFs as well that you guys see here on my watch list. TVIX, this is one to trade if there's volatility. If the VIX is spiking up like crazy, this could be one to trade. SQQQ is probably the one that I'm most interested in right now. This tracks the NASDAQ, and in my opinion, the NASDAQ is a bit overbought. It's actually the inverse of the NASDAQ, excuse me. So whenever the NASDAQ's selling off, SQQQ is going up at a 3x leveraged rate. So I think this is overbought. If we pull down, SQQQ could open up a fantastic opportunity either this week or next week if we do show some short-term weakness. So overall, these are some of the main ETFs and stocks that I'm watching heading into the new year here in 2020. I'd love to know down below in the comments, what are your thoughts on these picks? Let me know. And that's pretty much it for the video, guys. If you enjoyed it, feel free to go down below, hit the like button, and consider subscribing if you want to see further content from me. And if you want 2 free stocks from Webull, by the way, there's an affiliate link down below where if you sign up and deposit $100 using that link, you get 2 free stocks valued up to get this, guys, $1,400, which is absolutely crazy. So go take advantage of that. The link is down below. I'll catch you all in the next video. Thanks so much for watching. It means a lot to me, guys. I appreciate every single one of you all. Peace out.